Hello, everyone. Welcome to another episode of the Navvai Shift. Today we have David Withnell on. David, welcome. It's a pleasure to have you on the podcast.
Well, thank you very much for inviting me. It's an absolute pleasure to be here. Really looking forward to our conversation. This is a whole area that I'm very, very interested in. I hope to share that with your viewers, listeners, etc. So that's great.
Perfect. That's amazing. I know you've built a strong reputation in the market for your work with independent broker solutions. A Lloyd's broker also takes a fresh and highly service-driven approach in working with intermediaries. So for our viewers listening, can you give a bit more insight into what independent broker solutions do and type of
Oh,
clients you work with?
that's absolutely great. So we are a Lloyd's broker. We're an intermediary that's authorized by the FCA in the UK, and we act as an umbrella organization for appointed representatives to enter the market. So this means that we take responsibility for them, for their compliance, for their oversight, and we really act as that gateway to organizations who want to join the London insurance market and the global market. Let's not be ashamed of saying that, because we operate across the European Union and across the world as part of this. And we help them to get into the market. There are people who are coming in who are just starting out, who are perhaps breaking away from another broker, or maybe they are an organization that's operating globally and they want to be able to access the Lloyd's market, the London market, but without having a wholesale broker in between. And we facilitate that for them. So they come, they join us, we support them in their journey, we provide what they need, and hopefully at the end, we can wave goodbye to them as they go off on their journey as a self-regulated entity. The way I describe it is I'd quite happily be on the pier watching them sail off into the distance with a tear in my eye and dabbing my cheek. Very proud of them going on their journey.
No, that's amazing, David. So it's like quite an end-to-end process. But we've done some research prior to the podcast, and we've seen that your firm supports both authorized and non-authorized entities. So I wanted to ask, how do you think this shapes the kind of what you do, like day to day?
For us, you have authorized entities in who are looking after themselves. They take responsibility for themselves from a regulatory perspective, and that's an important thing. So in that situation, what we're doing is we're providing an outsourced service to them. Now, usually they are the appointed representatives who have moved on their journey, but what they need is that continuing, ongoing support that they trust and that they understand because they've been working with us before, to allow them to continue developing their business, but in a controlled manner, with understood costs, with those strong relationships, the support that's necessary. When they're unregulated is perhaps, I would say, is a word I would not use. They are regulated because we are taking responsibility for their regulation. And that's quite an important part for us. So for us as an organization, if we are dealing with these entities, put it bluntly, if they screw up, we're the ones who get into trouble. So I don't want them to screw up. None of us want that to happen. What we want is that very clear two-way relationship between the organizations that allows them to deliver what they want to their customers, to their investors, and what we need to do to be able to supply that service and to make sure that we follow the correct regulatory line.
I agree. Kind of want to get a bit more insight and get a bit more understanding. What kind of changes do you think are having the biggest impact on your clients right now?
Me, it's the technology side of things, is what it comes down to. We are in the London insurance market, which is, I would say, the oldest insurance market in the world, with Lloyds of London at its core. It's got a huge amount of history behind it. It's got a huge amount of tradition behind it, which is absolutely fantastic because it's created a stable market. There's nothing like it elsewhere in the world, and I will always fly the flag for it. I love it. I think it's absolutely brilliant. But there is always a but that's associated with this. It's making sure that that technology that is driving forward elsewhere globally, not only in the financial services industry and the global insurance industry, but elsewhere, is brought into the market. And that is something that can sometimes be delayed, I think, is the polite way of putting it. There's a drive forwards. Lloyds of London is operating what's known as Blueprint 2, which is a full digitisation of the Lloyds market, which is horrendously complex and probably requires a podcast on its own to try and explain how the thing actually works. But you've got so many different participants in the market, from the providers, the underwriters, the capital providers, to the brokers, cover holders and everyone who sits alongside it, and making sure that they are all in line on that digitization journey is vitally important. But also what we're seeing is a disruption potentially coming in from elsewhere that is driven by that technology. We're seeing new market entrants, fintech companies coming in with some very good ideas in terms of how insurance should be sold, how customers should be serviced as part of this. And we need to make sure that we keep up to date with them. Well, no more than keep up to date, that we engage with it and we go on that journey ourselves. But that can sometimes be a little bit tough when you have some very large organizations that don't have that agility that comes with a startup. And we need to take account of that. It's always that classic thing, isn't it? Everyone's looking out to be Ubered. Do we want to be Ubered as part of this? No. But there's also some very high barriers to get in, particularly from capital and the regulatory side. But this is where I'll fly the flag for us as an organization. We can actually assist with that. And that's quite an important thing for us. And then coming on to the next bit, it's the rise of AI and what the hell that means for us. Everyone's there looking at it thinking AI, and we've all been playing around on ChatGPT. My daughters managed to get a particularly good picture of me as a Muppet, which I thought was I actually quite liked it. It was quite a good one. Muppets are cool when it comes down to it, so I've got no argument on that one. No, it's taking it.
I see that after David, to be
I'll send it on to you if you want to. It's a very good one. I quite like it myself, so I'm not ashamed of it in the slightest. But what does it mean for us as an industry? What is it we're wanting to try and do? We are a service industry. We sell a promise to our customers in insurance that if something goes wrong, we'll help them out. And it's on a piece of paper, and that's all it is. And it can be flipping expensive for some people as well. So, okay, then, how do we make sure we maintain that trust of our customers, come through on that really powerful promise that we've made to them to help them out in a situation where things potentially gone wrong, and give them the support that they need? How do you use that AI technology to enable your business, your people, to give a better service? And this is my point is, and that's something I always say, I don't want it to be a replacement. I want it to be an enhancement of what we do. To slightly coin a phrase from Isaac Newton, he's talked about standing on the shoulders of giants. Well, we should be standing on the shoulders of AI in terms of pushing ourselves to those new heights that we can potentially achieve from it. And I think that's absolutely fantastic.
No, I definitely agree with you, David. And just carrying on the subject of AI, what do you think will be the biggest impact in terms of AI in the insurance industry?
Well, this is now where you're going to get me starting to rant on one of my pet subjects at the moment. So, and I quite honestly,
I'm all ears.
Yeah, and I'm quite honestly, I'm of an age now where I can rant on these sort of things and be quite happy about these things. So that's not a problem. To me, it's how the underwriting procedure could potentially change. Previously, underwriting has always been done on the basis of historical data. You've got records within your business, you've got actuarial tables and methodologies, you've got benchmarking and standard approaches that have allowed the insurance underwriting process to develop. With the ability of AI in its broadest sense to take vast quantities of data, chew them through, wrangle them, you're then creating a very much more detailed approach to underwriting. So it's looking at that real-time behavioral data, which is, at an initial glance, you think, hey, that's a really good idea because you're personalizing your insurance to your customer. But then it potentially, fatally undermines the whole concept of insurance, which is pooling, that everybody gets together, contributes their premiums to a pool. Some people in it are inherently more risky, some are not, but it kind of balances out in the end. And it means that everybody, or not everybody, but a lot of people will get coverage on this basis, and they'll get it on fairly reasonable terms. They're not being hugely, massively penalized because of their own inherent situation. However, if you go down that personalization, let's look at it that way, you remove that pooling activity, that ability to deliver. So you end up potentially with people who cannot be insured, or people who can only be insured at prohibitive costs, which means they end up being uninsured anyway. And it's this whole point of what's known as inclusive underwriting in the market. How do you make sure you bring along as many people as possible and find a way to insure them so that you're not in the insurance market in 10 years' time saying, well, we've managed to retain 3 insured people and they're each paying us £50,000. Everyone else, who cares? But we've got 3 people because we can't insure anyone else. Sustainable. Will not work. So how do we do it? And this is, again, looking at the data that is coming through and how you can use that to include those people who may struggle. Oh, a very good example would be something like medical insurance, where you have people with chronic conditions. How do you find a way to to include them as part of this? How do you look at people who, I don't know, someone like me whose BMI maybe is not where it should be, but that could impact on medical insurance? Well, there are ways and means that you can encourage people to do the right thing as part of this. And that's the whole point of it. If you are going down that effectively that personalization route, how can you then find a way to include people? I'm not saying I've got the answer on this in the slightest. Well, I've got a few ideas, but that's potentially for another time. But that is the big issue. And it's everyone charging off on down this road that we think is absolutely great to say, let's use this data, let's get that behavioral data into this, let's personalize it. We could find ourselves in a very tricky situation where we have a lot of people who are excluded from the market, which is no good for anybody.
And David, I was going to ask, I know you briefly touched upon it. I know you said like a lot of startups are definitely needed to move the needle in the right direction in the AI space. Do you believe bigger firms are misunderstood?
No, I think they're scared of it, is the honest answer. And I've come across this anecdotally in terms of conversations with other people in the industry. There is reluctance to launch in to AI. It's very much on the side of the swimming pool, dipping the big toe in, wondering whether you should go any further on that point, because maybe it could be a bit chilly, maybe it won't be. And that is a very important thing because people are doing things in the larger organizations, but they're doing it at a very low level. They're doing simple AI. They're looking at document management systems. They're looking at trying to draw data together into one particular place. They don't want to go further. Now, part of this, I think, is a regulatory concern. The UK FCA, is an interesting regulator when it comes down to it, and everybody is always very wary of upsetting them. So in this situation, well, do you want to do something that might cause trouble with the regulator? Nah, I don't think I want to do that. Let's do something a bit simpler. I think it's a lack of understanding about this as well, about what it can potentially achieve for organizations and the service that you're actually giving to your customers. But it's just potentially also a lack of understanding. And yeah, it's definitely out there. But I think also sitting within it, you've then got the old oil tanker analogy. Some of these organizations so large that actually what you're talking about here is sort of a paradigm shift coming in within the organizations. It's going to take a long time to steer it round in a way that actually works for everybody. And you just don't have the agility that you would have in that startup situation.
Sorry, that's just giving me a lot to think about, David. That's what
I told you I have a lot to say on these sort of things. Yes.
I guess obviously you've been talking about like the technological divide. I think you can all say that with all these massive companies, they have like a lot of like legacy rigid system. And bringing the conversation away from AI more to automation, there's a lot of risks associated with automation, for example. So what do you reckon the associated risks are versus automating and not automating?
You have to automate. You must automate. But so many firms, companies, organizations in the market will struggle to do this because they have so many legacy systems that are littering their own organization and the organizations that they've hoovered up as time has gone by. So we have some very, very active, particularly on the broking side, groups who are buying more and more other brokers in the UK and around the world. And they're buying and buying and buying, and it's in quite quick succession. And I sit back and I think, how the hell are you actually going to integrate all of your IT systems and all of your management systems and approaches to actually allow you to get some of those joined up benefits as part of this? Because the sexy, attractive thing is to do the next step, not to sit down and spend probably a lot of money, a lot of time, and a lot of stress in getting that integration coming through. You just have to do it. You have to be able to join up your systems and your data to be able to achieve what you need to achieve now. And again, it's going back to what we were talking about before. It's the agility. you've got these behemoths of organizations that have got multiple heads all over the place. Yeah, you've kind of backed yourself into a corner if you're not careful on something like this. So it has to be done, but it's having the appetite to do the dirty work that is necessary to actually be able to deliver what you need. It's not what you want, it's what you need to be able to thrive.
No, 100%. I definitely agree with you, David. And I also feel that businesses kind of have to make sure they're in a position to ensure they actually are ready to actually implement new technology without losing the work that's already done as well at the same time.
It is, but it's moving on from. I have all sorts of ways of describing things. And one of them is it's. Sorry, I get carried away in these sort of situations, and I talk too much. But that's just the nature of it. People get attracted by the shiny thing. There's a shiny thing that's coming through, and at the moment, particularly on the digitisation, on the technology, on the AI, it's a shiny thing. Ooh, this is something that we should be doing. And some people are approaching it with a tech first mindset of, hey, yeah, we should be doing something like this. Why should we be doing something like this? Well, because it's the new sexy thing and everyone's talking about it. We want to be able to talk about it at the next shareholders meeting and our shareholders will be impressed with this. We want to talk about it at the board and the board will go, oh, we're doing that now, are we? Well, that sounds very good, doesn't it? Rather than something that is actually required by the business that people are crying out for. And that's what I want us to be able to see within the industry. It's not just, well, we've done this thing and we've done a huge, great press release on it. Yeah, well, okay, whatever. Let's do something that actually works within an organization that can be iterative and that can evolve and go forwards. We're not going to try and do some sort of moonshot thing of, I don't know, I've seen so many of these things fail in their time when everyone said, right, let's do this enormous, great, big bang approach to what we're trying to achieve here and all. Achieve everything we need and everything will be perfect and the sky will be blue for the rest of the year. Brilliant, whatever. Or probably for a lot less money and a lot less stress, but you've not really got the shiny thing that you can show off to everybody.
I guess it's always about balance. Like you have to maintain. You can't. If you really sprint a marathon, you have to take your time, go at a nice pace, and eventually you'll get to the end.
It is. Yeah, it is. It is absolutely.
I was going to ask David. So I know you sort of touched on it already, but what advice would you give to leaders who feel pressured to adopt AI but unsure where to actually begin?
Start by asking the business what they want. Start by asking your customers what they want. Probably running both of those in parallel. And I'm sure you'll find that there will be a very quick joining together of those requirements, those wants. It's not you going and saying, right, I will build this thing and they will come. No, let's see what people want. Then we build the thing that they actually want and need, and what we need as an organization. And that's the point. It's starting early. Involve the teams who are actually operating it. Talk to the customers as part of this. Learn from them, and then you will truly understand what it is that is necessary. Still may not work, but at least you've got something there that is actually necessary. It's not tech first. It is business and customer first. Keep that in mind, and you will get something that actually works. But also, I think on this is have a bit of courage. And that is the thing that I think is lacking at the moment. And these conversations I had, which I came away quite depressed about in terms of the way people were approaching this. Everyone's nervous. Everyone's wary of it. And I can understand why, because, well, if it goes wrong, then you could have problems. Well, actually, yes, things go wrong. But what do? You pick yourself up, you dust yourself down, and you go back into it. And that's the way it should be on something like this. But if you're doing it in a way that is business, is customer driven, is mindful of the regulations and what you're trying to achieve, and you're not trying to do something ridiculous to start with, it won't go wrong. It will work. And it's having that courage to be able to do it. So yeah, talk to the business, talk to the customers, have courage. Hey, simple, isn't it? Yes, of course.
But unfortunately, not many people do it. The simple things people find very difficult. And I think courage sometimes can be a much more lucrative thing than people actually think.
Well, it can be.
With your tail between your legs.
Exactly. It's just no way to do it. It's no way to do it. And that is the point. That is what it comes down to. Clients won't wait for you. If you don't do it, your competitors will. Well, may do. I don't know. But at the very least, you're going to get some sort of agile little startup popping up in your particular business in your particular client segment. And you could find yourself in a lot of trouble.
And David, I know we kind of touched on AI and automation, but I know as a whole, insurance is still a relationship-driven business.
Yes.
So kind of to get insight, how do you maintain that trust? And a lot more of these processes are starting to be automated now.
It's a very good question. How do you maintain that? Because insurance in the London and Lloyd's market in particular is people driven. Lloyd's is still a lot of face-to-face business. You still have brokers going in, sitting opposite an underwriter and talking about the risk and building that relationship and building that trust and thinking, well, actually, this broker, they've brought me these things before and they've brought me good business. They know what they're talking about. I trust that they're not going to give me a load of old rubbish. So it helps in that. And it's also in terms of the underwriters when they're sharing capacity on this. It's vitally important. So where do you go with this? Well, you use technology to make things more efficient, but it then gives you that time to build on and work on those relationships. But sitting underneath it as well, it's understanding how these decisions are actually being made. Is it a black box that's doing this that no one understands? Hey, look, I put your details in here and it spits out your insurance policy at the other end. Well, what's going on there? How does it work? How are you actually judging what I'm bringing to you apart from, well, it's just a machine that does it for us? That doesn't work. It's having that explainability that sits alongside it. It's also understanding where it sits in the value chain of the service and the product that you're actually providing. Are you divorcing yourself from a decision making? Well, going back to a very old series, the computer says no on something like this. Or actually, we thought about it. There is something that underlies it, maybe in the pricing, maybe in the development of the product, where you're using the technology to support that. But actually, there's still a human in the loop. Now, it's going to depend on the type of product. If you're doing something mass market, then there's a strong understanding that that is going to be moving forwards into quite a technical driven approach to it. And actually, as a consumer, I probably quite want that because I want to know I'm getting a good price out of it. It's going to be really simple to do, and I'm going to be getting a really good service. I saw one of, was it last year, Lemonade? It's an American property entity. I can't remember, insurer, cover holder. Anyway, one of those anyway. And they did a press release to say, hey, we paid a claim. So from notification of the claim to money going into the claimant's bank account was 2 seconds. Now, okay, I quite like the idea of doing that. I think that's quite amazing. But how do you know you're getting the right decision on this?
Yeah, exactly.
It's sometimes it's not the speed of the journey, it's the quality of the journey that you're going through as part of this. Do I trust it in that situation? Well, I'm not sure. Maybe I could learn and build that trust, but I'll be very wary of it to start with as part of it. And it's finding that situation where that human judgment comes in as part of it. You particularly see that in the London market, where you're looking at basically some weird stuff that's sometimes coming in of what is this? Okay, this is a very difficult situation. We've got maybe a stressed case. How do we find a way through that actually gives the customer what they want, but also provides the protection to the parties involved as part of it? And it will come with time. It will come with, I think, that organic, evolved approach to tech being launched within the market, where you're starting out with it being driven by the business and the customer needs, that it will grow, it will evolve, and the trust will grow and evolve as that continues, rather than just sort of lobbing in an enormous great piece of tech or something like that. It just creates huge, great problems, and everyone's running for cover at the end of it, including your customers.
You can't blame the customers at the end of the day, right?
Ultimately,
No, we're having a conversation, honestly, David. But I was going to ask, so you talked about explainability. Do you think that's the main reason why firms are kind of scared to adopt AI?
well, if you've got the CEO of ChatGPT saying, "Well, I don't understand how this thing works," I mean, what hope is there for a man like me on something like this? It's a big issue. How the hell do you explain the unexplainable when the people who should be able to explain it can't? Yeah, it's a problem. I think it's something that holds people back because you, particularly in the financial services industry, have an interesting thing, which is the senior managers regime, which means people who are in specific roles are authorized by the regulator. If something goes wrong, they are held personally accountable by the regulator for the thing that has gone wrong. Now, that can be personal fines, that can be being thrown out of the industry as a whole. That's pretty major. Do you want to do something that could end up like that? No, not in the slightest. I didn't even have to think about that. I said it because that's exactly how everyone else feels. So actually, it's creating an environment and a climate of risk aversity. People don't want to take those risks because of what comes through. But what did I say earlier on? Courage. courage is also necessary. Courage of people to look at these things and think, yeah, we're doing this in the right way. If, and I don't expect it to, if it does go wrong, we're in a position to be able to explain and understand why and control any potential issues that come out of it. So it is courage, it's risk management that sits alongside it as well. But I keep coming back to the courage on there and that rather depressing conversation I had.
And David, I was also going to ask, are clients expecting more digital convenience now from what you see, or you think they still do value the face-to-face conversations?
It depends. It depends on what's going on. Say, for example, you're dealing with a medical insurance policy. In that situation, if you're having a blood test or you need some repeat prescription or something like that, you want that done as quickly as possible with the minimal level of impact on you as an individual. And that's good for you, but it's also good for the insurer because it's minimizing the costs, but it's also minimizing the time stress costs for the customer as well. However, if you're going on a very difficult medical journey, maybe you're dealing with cancer or something like that, I would suggest you don't want that. And I would suggest that as an organization, if you are there saying to your team, people who are working on your phone lines, actually, I want you to spend an hour with that person, talking to them, helping them through, helping them understand what needs to be done, then that's great. That is absolutely brilliant. But if you're finding ways to automate where you possibly can to enable them to spend more time dealing with the difficult cases, it's a win-win for everybody. And that's what I think it is. I think it's the nature of the transaction. And we're all going down certain routes with, particularly on our car insurance and house insurance and things like that. And how many times have we always ended up banging our heads against the table as the next problem occurs and it drops out, or there are particular problems like that? Yeah, there's a time and a place.
No, I definitely do agree with that. I think even a previous podcast we touched on the use of AI within the medical field. I know it's different to the insurance field, but I got asked the question is, would you rather have a robot do a heart surgery on you, or would you rather a human do the surgery on you? And there's a lot of different thoughts and views on it in terms of you want to have that human interaction, that human connection. But at the same time, if an AI can offer that 100% accuracy, it ends up being quite a wicked one.
It really does. And I think it's the nature of, okay, the wrong word, but the best one I can think of, the transaction you're involved in and what that is in terms of what you as a customer actually want. And I think probably saying something completely wrong here, but if you are listening to what the customer wants in terms of the nature of the transaction and giving them that, as opposed to you as a business saying to your customer, this is the transaction that you will experience because it is the best transaction for us, there is a difference. Now, it's not 1 or 0. There needs to be a balance that sits alongside it. But listen to what the customer wants out of it rather than just what you want to apply.
Definitely. And David, I also want to touch on the London market in general is always under pressure to evolve. So what trends do you think Lloyd's brokers should be start paying close attention to?
Evolve themselves. And I think that is the most important part that sits alongside this. It has to be. You're seeing more, well, I suppose it's looking at it's in terms of embedded insurance coming through, which is meaning it's direct transaction between the insurer and the customer. You're seeing more customers being enabled to work directly with insurers where traditionally they'd have had a broker in place. What does it mean to be a broker? So what is the broker of the future going to look like? And this is where it can get interesting. This is just me sort of just randomly coming up with stuff of what I think it should be. Part consultant, working with their customer, finding solutions to them, for what they need. Part analyst, because they need to go in and talk to the customer and find out what it is they actually need, then find those solutions for it. Relationship manager, so that you're actually then working together. What is it you're looking at the moment? So clients now, particularly the more digitally savvy, the newer ones, they're expecting more from their broker than just an annual conversation when it comes up to renewal. They want to find out information. They want to see how things are going. They want proactive guidance. And I think that's where it comes down to. So this is where it comes back to this broker of the future, this sort of Renaissance person who can achieve all of these things. But the big thing for me is what it comes down to is it's an innovator. The market is very old. in terms of what's gone here. So what is it? Lloyds of London, 1660s, first started in the coffee house, and it's changed and it's moved on from there. And I'm a fan of history, and I've seen how you can see how things have changed. We need to ensure the innovation is there. What is the next product you're looking for? What are you going to do about intangible assets? If you've got a company where 80% of their value sits in their intangible assets, how are you going to find a way to provide insurance that gives the people, those businesses, the coverage they need, want at a price that is right? How are you going to deal with their intellectual property, their brands, their customers, their data stores that they have? All of that is potentially insurable. All of that is something that the market could say, well, we could help you with that. Using the data, using the innovation, using the courage to develop these things, you can do that. And I think this is where the broker plays such an important part in the market. It can innovate, it should innovate, it must innovate, because it has the direct contact with the customer. And it's using that knowledge, it's using those relationships to develop something it can then go to the market with and say, well, how's about this then? And see what it comes up with.
No, I definitely agree, David. I mean, we have a little saying, we say innovate or get left behind.
You do. Going back to that bit, you're like sat on the side of the road as everyone roars past you off in the distance with your customers. And that's not going to work. But it's making the industry relevant. If you look at the insurance industry, it is very much based on what I would call old business. The insurance of things, it's the insurance of buildings, of machinery, liabilities, okay, maybe not things, but it's there. But there are so many new things that are coming through, particularly in that intangible thing, that's absolutely great. I messed about on ChatGPT and I put something on LinkedIn about this. I pushed it to say, come on, what is the most crazy thing that we could insure? And it came up with something. I said, no, I want more crazy than that. And it came back with what was it called parallel self-insurance. So it's the idea that we all make decisions every day. And if you make a decision, it will take you in one direction. If you don't take a decision, you would have gone in another direction. But what would happen if, say, for example, that other direction that you could have gone in would have put you in a better position than you are in with the direction you've actually taken here? So actually, when you decided, well, I'm not going to take that job, actually, I'm going to stay where I am. And actually, if you'd taken that job, you may have made more money, you may have made more bonuses, you may have met someone new and formed a relationship. I don't know what's part of it. But anyway, it came up with this idea of, well, how could we could use AI and large and modeling to work out what could have been and say, well, actually, you went that way, but if you went there, you could have got that. We'll pay you to put you in the position that you should have been on there. And it's just completely nuts when it comes down to it. But that's what we should be doing in the industry, is looking at these things and thinking, well, someone could suffer a loss on this. That creates an insurable interest, which means we could sell something. Now, whether someone would want to buy that but that's what it comes down to. And that's where we should be looking at that innovation. Where next?
If I had that policy, I'd be claiming a lot.
Yeah, I know. Exactly. I dread to think how much I'd be owed on it myself, but that's another story entirely.
So, David, just to wrap up, so obviously you've spoken about innovation. So in the insurance space, what changes or what expectations do you have within the next, let's say, 12 to 24 months?
A good question. Unfortunately, in the Lloyds market, I think we will still be talking about Blueprint 2, which is the digitisation of the market. And we have a new CEO coming into Lloyds of London, and I hope he will be pushing this forwards, because it is a little bit frustrating. Elsewhere, I think we will see, I hope, more insuretechs coming in, because I think that is vital to our industry. It's sort of like that electric jolt that we need to get things done and to innovate and to change. But it also creates healthy competition, which is no bad thing for anybody in the industry, and also, more importantly, for our customers. I think we're seeing the FCA, Financial Conduct Authority, realize that they've gone too far in their regulation and start rowing back on that. And I hope that will have a positive impact on firms in terms of being less risk averse. To me, insurance is all about taking risks. Well, we take risks, take on risks for people, but it means we need to take a risk. We may have to pay out, and we do it in a controlled way. I think in the industry, there has been too much of a movement to risk aversity. We don't want to take risks because of the implications of that from a regulatory perspective, from a reputational perspective, if something goes wrong, blows up, and everyone's pointing at you and saying, what the hell have you just done, to the costs that are associated with it. And I hope we will see more courage in the industry during that time. And that will manifest itself in developments, in new ideas, in the adoption of technology, and a better service for everybody.
I 100% agree with you, David, on that. David, this has been a very, very insightful conversation. I really did enjoy your views and the topics we've covered. For our viewers listening, what would be the best way to kind of find out a bit more about yourself?
Look me up on LinkedIn. I tend to publish quite a lot on there in terms of what's just annoyed me, or what I'm interested in, or what I've been thinking about, or what I'm up to. So have a look at that, reach out. I'm always interested in talking to interesting people. Let's put it that way, time permitting, of course. And we go on that basis. To me, I'm in the insurance industry, an industry I love, and I love to share that with people.
And that's a wrap up of the Navvai Shift. David, we thank you much again for your time today. Really did enjoy the conversation.
Brilliant. And thank you for your time. I've thoroughly enjoyed it as well. I hope I've not bored people too badly.
No, at all.